Good morning once again, everybody. I'm Erik Schatzker. This is Carson Block. I hope he doesn't need too much of an introduction. He is the founder and the CIO of Muddy Waters. As you just heard, Muddy Waters, as you may know, is formerly a research outfit. It's now a money management firm, renowned and in some circles, shall we say infamous, Carson, for its short calls and its detailed reports. We're not just live here with Carson at Bloomberg Invest. We are, as of this moment, Carson, we're live on Bloomberg Television worldwide.
Great.
So let's introduce Carson Block to the global viewing audience. Carson, you have a reputation, for lack of a better way of expressing it, as the Chinese fraud guy. Sinoforest was certainly the most prominent of your calls. Some of you may remember that. It's going back quite a few years ago. At this point, how many Chinese frauds do you figure have been perpetrated in the American capital market?
Sure. Well, I'm going to refer to a documentary that came out about 3 or 4 months ago called The China Hustle. And per The China Hustle, and I agree with this, there were literally about 400 frauds listed in the United States last decade from the PRC. So, yeah, figure is...
These are Chinese domiciled companies that raised equity capital here in the United States.
Yes. So Chinese companies whose operations are based in China. Often the legal domicile is Cayman or what have you, but which affords them a few listing and reporting loopholes here in the U.S. But yeah, these are companies from China that came to the U.S. And I don't think there's any parallel in history of capital markets where you've had this systemic issue of, again, literally hundreds of frauds going to another country's capital markets to suck up capital and expatriate it to their home country.
Any idea how much money was lost from peak to trough?
In terms of the amounts of money raised that were companies that basically went to zero or close to it, the estimates are maybe 30 to 40 billion, but that's of the companies that have washed out of the system. It's important to understand that there are still a number of these companies that are listed in the U.S. from the PRC that, while they're maybe not completely fake the way that their predecessors were, have real fraud risks, and a number of them do show indicia of fabricating profits. So if we look at that combined market cap, it is massive.
Frauds are not unique to China, obviously. Why is there this bigger point, if you will, because that's what you're making, a bigger point to be made about China's impact on the American capital market and the capitalist system, if you like, if we want to extend it a little bit more?
Sure. Well, in this, so I would argue that we should start looking at, as Western investors, we should start looking at China equities as sin stocks, where, from a governance perspective, it's really something where allocators should be asking themselves whether it's something that they should own. And it goes beyond fraud. Let's be clear. Only one leg of the issues is this idea that Chinese actors can list companies in the U.S. that are frauds and do it with total impunity. So that's one leg. But another leg is that we are financing. So at the end of the day, and I would argue this is a fact, but at the end of the day, in China, there is no such thing as a purely private company. That the private companies will do the bidding of the state when they are required to do so. And so we're at this very strange moment in history where, as liberal democracies, we're struggling to adjust to this devolution of the technological edge from the government sector to the private sector. And so our best technologies now, our strategic technologies, are largely in the hands of private companies in the US who are open to doing business with these companies from China that you don't know whether they're really acting in their own interest or in the interest of the government. And the fact is, we give liquid markets to the securities of some of these companies.
So you've said a couple of provocative things. On the one hand, while these frauds may not be state orchestrated, if I understand you correctly, you're saying that they are at least state sanctioned, if not aided and abetted by the Chinese government.
So the short answer is yes. When I began doing this in 2010, my expectation was that the PRC government would remain neutral. I mean, it's, truly, if companies are listed overseas and they are defrauding U.S. investors, that's not within the purview of the China Securities Regulatory Commission, and the U.S. and PRC governments do not cooperate well on many levels. So my expectation was that they remain neutral, but they didn't. They did some things that were very important. And so one of them that was an issue for a while, but I think we unfortunately capitulated on, when there were these fraud blowups, the SEC sought the working papers from the Big Four's China affiliates. And
Auditing
all
firms.
of a sudden, yes. So all of a sudden, China got out into the zeitgeist that these audit papers for, again, purportedly private companies are covered by state secret laws. Therefore, any person in China who provided those audit papers to a U.S. government agency could be imprisoned for a long time. Now, I don't know how we accepted that. And at one point, there was an SEC administrative law judge who ruled that the Big Four China affiliates, that their practice licenses in the U.S. should be suspended for 6 months. And this could have had pretty significant effects because depending on when that happened in various companies' audit calendar, you might have seen a whole host of China companies listed in the U.S. start to go through delisting proceedings. But what ultimately happened was the U.S. government, this is the prior administration, backed down. They settled with each of the Big Four for $500,000. And I mean, that's equivalent to 1 year, one audit, medium-sized audit client fees. And so at the end of the day, when nobody really has done jail time in the US for this, when the government over there is acting to protect the bad actors, I mean, what incentive system does that create? It's like Charlie Munger says, you show me the incentive, I'll show you the outcome.
The second point that you made a few moments ago, which I want to turn back to for just a second, is this idea, and maybe not just a second, is this idea that this, I don't know, I'll use the term manipulation, you tell me what suits best, but let's say it's this Chinese manipulation of the US capital market isn't so different and maybe part and parcel of the same strategy that the Chinese have utilized to do what we now accept to be fact, right? Obtain, by hook or by crook, and in some cases by theft, Western and largely American advanced technology.
Right. Yeah, I mean, that is really the interesting point here because at this moment, I think there's more acknowledgement in America that China as government and as a system does not play by the rules that the rest of the international system plays by. So,
and you accept that as fact?
Yes. So when it comes to, steel and aluminum, yes. Dumping of other products and commodities, yes. Rampant IP theft, yes. And I don't think a lot of people in the US who pay attention to this issue would disagree. So it's really strange that the only remaining area, and that's really in some ways the lifeblood that finances all of this bad conduct, the capital markets, nobody's stepping back and saying, hey, what's our role? How complicit are we in all of this by allowing these companies to raise money here and have liquid markets for their securities? And that, I think, is a very interesting oversight. And just I think the reason for that is I was talking to a friend who's peripherally involved in the annual preparation of this Joint Congressional Committee report on the U.S.-China economic relationship. And that came out in November of this last year. And I think that a lot of the moves by CFIUS were really drawn from that report. But I said to him, I think spot on in many areas, but it's funny, you guys aren't talking about capital markets. And he said, well, you know what? It's just because in the government, we don't have that expertise, the expertise that somebody like you has. So I hope that's going to change. I hope that we start having conversations also about the capital markets with respect to China.
I don't know how everybody else feels, but at the very least, let me put it this way. If we were talking about something in the order of a Chinese conspiracy in U.S. capital markets, in and of itself, it might sound a bit conspiratorial or crazy, notwithstanding the fact that you have a measured tone and you're sitting here smartly dressed in a suit and tie. But when you put it in context, it begins and probably begins to make more sense to more people. Mm-hmm. That said, there may be folks in this room, folks who are watching, listening to this conversation, asking themselves, to what end? And I know you have an answer for this because I read it in a piece that Carson wrote for Forbes magazine back in March. You said China has a concerted strategy to degrade the economies of and transfer wealth from Western economies. That was the intent here, wealth transfer?
I believe that is now the intent. And I don't know if that always was the intention. And I think back last decade, you had a number of bad actors who came across people who are intermediaries who said, hey, look, you've got, it's a heads you win, tails they lose proposition, float stock in the US, nothing will happen to you. So I don't think that that was coordinated by the Chinese government, but the responses to it were. And there's one thing that we left out that's also a very important part of the response. So back in 2012, the government in China started cracking down on due diligence of companies that were listed overseas and also Hong Kong. But then what happened was they began financing the take privates of a number of companies. And many of these companies were, I think just, complete zeros. And so US investors in some of those cases got paid, and that debt financing was often provided by Chinese policy banks. Now, why did they do that? What was strategic? Well, here comes the Alibaba IPO. Here come the valuations of, the exploding of all these other companies. So I think that was a key part of the strategy, was to lull us into complacency and try to sweep this under the rug. And unfortunately, it's like they know us better than we know ourselves. It worked.
So let's talk about remedies, because one of the things that you mentioned earlier, your recommendations, is that investors, institutional investors, individual investors should treat Chinese stocks as sin stocks, which is to say what? You're drawing the parallel to tobacco and other things and alcohol, let's say. Why? In the sense, there are lots of people who might look on, drugs and alcohol and tobacco as a sin, as it were, but are still quite happy to own those stocks.
Well, let's put aside for a moment the fraud issue. Let's go back to that joint congressional report that I referenced earlier. According to that report, and this surprised me, China's artificial intelligence is apparently on par with that of the US. And this is obviously a major area of strategic competition. This is about the future. Also, according to that report, the entity in China that has the leading development of AI is Baidu. Okay, well, this is our strategic competitor. And again, at the end of the day, none of these companies will act solely as private companies. They will, to some extent, act as extensions of the state. Why does Baidu have a liquid market for securities in the US?
So hang on a second. Are you making the case that we should lock Chinese companies out of the US capital market?
Now, there are different problems and there are different remedies. When I talk about viewing them as sin stocks, that's really a market type approach. That's something that allocators have to really think about. If you're running pension money, are you de facto financing to
You're making
some
the case
extent,
for governance, in other words.
The erosion of, through unfair competition.
Mm-hmm.
Look, and I want to differentiate here. I'm for free trade. I am for competition. But you have competition within the rules and competition outside of the rules. And too often, China is falling well outside the rules. So if you think about that and you're an allocator, I think that does have important dimensions for how you vote with your dollars. Are you abetting this, or are you going to say that we're dialing back our allocations, we're not comfortable to it or with it? I think that's one view. Now, from the regulatory standpoint, PCAOB still doesn't have inspections of auditors in China, and look, this is the bare minimum that could be done. Okay, I think that those inspections would be gamed, but basically the PCAOB, the US government, repeatedly got the finger every time they requested that. You don't have the ability to bring anybody to justice from China for defrauding U.S. investors. You know, if there were some government-to-government cooperation in that area, it would be helpful. The variable interest entity structure, I think, is just, I mean, it's ripe for abuse. And this might get a little bit wonkish, but one point that I like to make is that, you know, these VIEs basically means that you as the shareholder of the public company, you don't actually own the operating business. The chairman and, you know, a few friends own that. And there's supposed to be this contractual connection between the OpCo and the ListCo. And the OpCo is supposed to make payments periodically to the ListCo. Well, you can look at the taxes that these companies pay, and if you do a sophisticated analysis, you can see that virtually no VIE ever makes the payments that are supposedly required to make it. In other words, they've all been in material breach, or most of them have been in material breach, from what I could tell, probably since day one of putting those VIE packages in place. So why, again, are we allowing that situation to perpetuate in U.S. markets?
We'll finish with this. How do you reconcile the obvious conflict between the need to find returns? Every investor, at least every equity investor, is looking for growth, right? There's growth in China. Notwithstanding the number of frauds that may be perpetrated, the economy is growing faster than this one, and there are companies within that economy that are growing at rates far beyond many things that we see in this capital market, other developed markets like Europe, for example. And then, of course, this question that you raise and this governance burden that you're trying to place upon these investors to think about the national security risks that effectively that Chinese investments pose. How do you reconcile that conflict?
Look, we're in a new era. I mean, again, as I said, where, you know, our investment dollars matter more to our national security than they ever did, you know, when the governments controlled technology. But I'm not expecting anybody to walk out of here and say, wow, that was really smart, I'm going to puke my Chinese stocks. Okay, that's not going to happen. But for people who are running risk in China, who are allocating it, I hope that I've at least posed some questions that you're going to ask yourself. And look, if your answer is, you know, I've got a fiduciary duty to investors, I think this is the best way of fulfilling my fiduciary duty. Fiduciary duties don't, at this point, allow me to carve out my, you know, my moral problem with what China's doing. That's your answer. But at least ask the question. That's what I hope people will do.
Carson, I knew it would be provocative at the very least. Please join me in thanking Carson Block of Muddy Waters.